The week ahead. Everything I read this weekend seemed to focus on how bad last week was. Market-generated information alerts me to the possibility of a far different scenario for the coming week. Last week attempted to overwhelm the markets with inflation-loaded information, terminating with PCE on Friday, which was hotter than anticipated. In other words, it was an all-out frontal attack. If you view Friday relative to Thursday's settle, Friday looks really weak. If you view Friday relative to Thursday's low, you get a whole different view. Next week is relatively mild in scheduled economic releases, which may bring some relief to the market and put the focus more on stocks. But let's look a little deeper into Friday. Friday, which was the PCE, which was hotter than expected, saw an initial knee-jerk reaction to sell the price and gap lower. The first thing that caught my eye is the market was unable to hold that gap. The next thing that I saw was that volume on Friday was very light, not what you would expect for a number that the market on the surface didn't like. Friday also failed to hold the early morning PCE announcement low and showed some strength with a late recovery. Now, we don't know if that recovery was simply short covering for a market that was too short going into the week, but it was unusual activity going into the weekend. So what I'm saying is don't get misled by what you read in the press. Maybe they're right, but keep an open mind. In order to keep perspective, what I would suggest, look at the monthly bar, which is in front of you. You see an excess low, and as weak as this market appears to be, we have been one time framing higher for the past 4 months. Currently, February is trading down near the February low. Wednesday, we begin March trading. So in order to keep perspective, the first thing I will be looking at is, can March take out the February low? If March fails to trade below February and lead to the cessation of one-time framing higher on the monthly bar, the odds of at least a meaningful short covering rally increase substantially. One of the other things that has my attention, there are 4 questionable highs since the Thursday a week ago that Jim Bullard talked about an increase in rates or an increase in the what the FOMC does at the next meeting. Historically, that is an indication that the selling that we've been witnessing was done by weaker hands, not by stronger hands from the investment side or even the more serious side of trading. So all I'm saying is, we end this short talk, be objective, don't listen to the news, listen to what the market tells you. And you've got the monthly bar to give you a pretty good indication. If the weakness is there, we should trade below the February low. For unable to trade below the February low, alerts me to a possible short covering rally. Thank you. Have a great week.